Address the equity fund flows, which have seen an outflow in the month of July, and the first monthly outflow which has come about in about almost 4 years. So let's chat a little bit more about this with NS Venkatesh, the CEO at AMFI, joining us on the show right now. Mr. Venkatesh, hi afternoon. Why is it that we're seeing the redemptions from equity schemes and the factors that you think attributed to these outflows?
Yes, there is an outflow this time compared to the last month. Essentially, when I look at it, I believe that it could be one profit taking which has happened. That could be one of the reasons why people are taking their money out of the equity funds, because the market has run up quite a bit. And second thing is could be their goals are met, because mutual funds are investment vehicles to meet their goals. So their goals are met. So towards that, after the goals are met, they are taking away their money. The third thing could be somebody who has entered in between finds that, okay, this is the right opportunity for him to get out to cut his losses. Maybe he has utilized that to cut his losses, which I feel is not the right approach, because mutual fund is a long-term investment vehicle and he needs to continue to remain invested to reap the returns that he
But balance funds as well were positioned as safe products from the risk reward perspective, but that too has seen an outflow. Why do you think so?
Yeah, we have been seeing in the balance category continuous outflows only. It is not as if there is net flows which are positive over the last 4-5 months. The reason could be the dividend structure. Essentially the taxation laws relating to dividend has got changed, so that has maybe put off these people who had invested for that monthly dividend schemes. I think that is one of the reasons why people would have taken it out. So maybe the senior citizens and the pensioners have taken this out, because otherwise they will have to pay dividend on this particular money that they receive on a monthly basis. So I think the structure got changed because of that. Till that dividend thing is clarified or maybe put back to the old system, I think you will see an outflow in the balance funds.
For many months now, the AUM growth has also been less than the overall rise that we've seen in the market. Unable to beat the market, let alone generate alpha. Why is that?
Net growth is 6%. The net growth comprises of the outflow in the from the AUM plus the positive growth due to the market movements that the fund manager has captured. So if redemptions up to the extent of around 7,000 to 9,000 crore has happened there, that will also pull down the AUM. If you take that, if that had not happened, then definitely the AUM numbers would have been much more higher. So you will again say that an alpha has been created. So I think in the mutual fund, this thing, if you see 6%, the growth is there. That means essentially at least it is matching the growth in the Sensex. What has contributed is the outflow which has happened in the equity mutual funds. But I would say that both the structures will continue to remain in India, the ETF structure as well as the active fund managers structure. In India, you will see there is scope for more returns to happen in the active fund manager going ahead. The ETF will as a percentage is very, very limited at this particular point of time. That will also continue to grow. At a certain stage where let us say the number of stocks are limited, then maybe people will rather move towards ETF than remain in active.
In terms of how many SIP accounts have been added and closed in the last few months, what's the trend looking like there?
No, I would say that the SIP number coming down to 7,830 during a pandemic, nationwide or a global crisis at that level is a good thing to happen. That means still people are continuing to repose faith in the SIP. So that 7,830 is a heartening number to see at this particular stage. But looking at the account opening this month, 11 lakh odd new accounts got opened, and somewhere around 7 lakh odd accounts got closed. So net was somewhere around 3.5 lakh net account opening. Last month it was somewhere around 9 lakh new accounts got opened, and somewhere around 6.5 lakh accounts got closed. So around 2.5 lakh accounts was the net opening, if you are looking at it from that stage. So to that much extent, yes, there is in the net, you are seeing a decline, more decline in this month compared to the last month. I would say that the 11 lakh number is a heartening number to see. Despite the pandemic, there is 11 lakh number of people who are coming and opening SIP accounts for their savings and investment purposes. So that is a good thing to happen. And the 7 lakhs number which is closing could again comprise of people doing a profit booking, people meeting their goals sort of thing, and maybe a part because panic has set in for them. So I would suggest that we see the trend in these two instruments in a different manner. I would also say that the SIP now value could be marginally declined in this month, with 11 lakh opening happening and 7,830 crores only coming in. So the per ticket size value could have come down compared to the average values that we had seen in the past.
Sure. Also wanted to understand, we've seen a sharp increase of about 90% in gold ETFs. So do you think this trend is here to stay?
One, I would say the base is small. So when the base is small, any jump will, in a percentage terms, will show an exaggerated number. That is where it is. But having said that, I would say that some of the people may have thought that gold is a safe haven approach. So people would have moved their money. The HNIs would have moved their money into that gold. And the gold international prices are also not showing signs of abating. It is going up and up only. So which is getting reflected even in the Indian market, where the gold prices have gone up substantially compared to what is in January to July. So I would say that it's a combination of a safe haven approach coming in and a little bit of the base effect which is contributing. Having said that, I would say that if you look at the debt funds is showing better growth, isn't it? When you look at the corporate bond fund, you see money. When you see the PSU and banking fund, you see the money. So everywhere the money is coming. It's not as if they are moving away from other asset classes. Maybe in the equity they have taken their money out, but in the debt they have shown they are reaffirmed their faith in debt. They have come back to the debt funds because of the benign interest rate scenario that is prevailing in the country, and also the Franklin Templeton fears have abated to a great extent because of the actions taken by SEBI as well as RBI, and also internally the actions taken by the AMCs in restructuring their portfolios and putting in robust risk management principles. So I think it's a combination of that. So money moving to gold ETF at 90% is a base effect. I would put it like that.
Okay, Mr. Venkatesh, good to have you on the show and analyze AMFI's latest monthly data.